I want to make this video, guys, for the ones of you that constantly are moving their stop losses and they're in panic mode. The trade is going to hit their stop loss. So in reality, 90% of traders, they're in the same paradigm of moving their stop loss or not moving the stop loss when they should be moving their stop loss. What I want to show in this video is first a practical trade that I took, and this is Friday afternoon, so this needs to be taken into consideration as well. And also I want to show you why you should not be moving your stop losses too early, because if you do, you're definitely limiting first your potential, second, most likely gonna end up with a loser. And again, guys, this is more tactical than anything else. So you need good strategy, good philosophy behind any trading system, especially a day trading system. So by showing you those examples, it doesn't necessarily mean you need to be using my day trading system. This is applicable to any day trading system. These are foundational rules, which if you're not willing to follow and if you're breaking on a regular basis, then you can expect to become a successful trader in the next 3 to 6 months. So first of all, you need to start with the foundations, lay the foundations, then start building the house and everything else. So you can't put the windows before you lay the foundation, so to speak. Alrighty, guys, before further ado, let's jump to what I wanted to show you and see this real trade. So this is the difference between a high probability trade and any other trade, guys. With a high probability trade, what I'm achieving here and what I'm trying to do is definitely not move my stop loss. I keep on talking about this, but now I want to show you in reality. I'm running this trade. It's during the real market, so you can see how the price is reacting. This is where I entered. The price has already retested my entry once, and currently it's not doing anything else, or it's not moving anywhere above this level. So in these points, what most of the people will be doing is they will be moving their stop losses under the entry. They will be trying to book some profits. In reality, what happens is they're limiting their potential rewards, because look what's going to happen. And I hope, I don't have a crystal ball, but usually this happens 9 out of 10 times. The price just retests the entry point. If, again, I repeat, if it's high probability point, and then it goes in the other direction. So this is a typical newbie mistake. This is how the professional traders are taking the money from the inexperienced traders. Moving your stop loss under, guys, this is just feeding the big guys. So in this case, as you can see, I have placed my stop loss and I'm not touching it. So I'm gonna stop this video now and then switch on once the price moves away or stops me out in 1 out of 10 occasions. Of course, this can happen as well. Here we are, guys, and now the price is it made a low here, and then it's trying to pick up the latest sellers here, people who are losing confidence and they don't really want to hold and want to pocket some tiny profits, which at this point it will be like 1 to 1.5 risk to reward ratio on this trade. Now bear in mind, this is Friday, so I would not expect to be chasing a double-digit returning trade. So in other words, I'll be happy with 5 or 7x's, but as you can see, the price just keeps on going lower. Of course, I wouldn't be surprised to see another retest of the entry, which most likely will take out the most fragile, or the least actually fragile of those short sellers, and only after the real move will actually begin. So I'm going to stick with this trade, just do another part once the price is making another turn. And now the real move begins, guys. As you can see here, we tested a couple of times. Since it's Friday, I guess the big players are more impatient. So again, we are not maximizing the returns on Friday, but anywhere between 5 and 7x's, somewhere here, is actually a good place to book profits. So I'm going to take a screenshot for the community, basically take profits somewhere here. It's Friday, as I said, so let's not maximize it. But you see the principle? The principle is never panic when others are actually panicking. Alrighty, guys, so what I mean by this practical lesson is something that everyone should be using in their days. So no matter what system are you using, usually most of the day trading systems, they are hopefully using a high probability method. So in other words, this is the place where the price is going to go and then reverse. If you're taking a reversal trade, you should be positioning yourself ideally in a place where you can use a very tight stop loss. I'm talking about a day trading system and not risking a lot. So if this is your reversal points, whatever magic or whatever system you're using, your stop loss is very tight. So let's say this is your stop loss here. I'm going to mark this to be your stop loss. Okay, so by having your stop loss very tight, then this is your entry. The next thing that you should be doing is to be monitoring the price. So if let's say you enter here, what usually happens, the price might get a negative reaction first, then it might start going higher, which we've seen in literally in the real-time example. So This is nothing that I'm making up at this moment. This happens time and time again. As I said, 9 out of 10 times you're gonna experience the same or very similar reactions. So if this is your entry here, the price will naturally retest it because you have a lot of sellers. You're not the only person. So some people are waiting for double confirmation. Other people are just cleaning their orders or getting out of trades at this point. This should be the place that you should be entering in a short trade. This should be a highly reversal point with very highly probabilistic approach. In other words, you must be certain that when the price goes to level X, then it will either turn around or give you a breakout. And if you don't know one of those two occasions will happen, you're using a stop loss. In our case, this is a very tight stop loss. And why I'm laughing, the reason is because a lot of traders, they think that they can predict the markets. In reality, nobody knows what's happening. That's why the only thing we can do is narrow it down, use a very tight stop loss, and then do the right things after. And the right thing to do after placing your entry and your stop loss is to actually sit on your hands. So a lot of traders would start freaking out. They would see the price coming here, they would scratch a trade. Another group of traders, when they see the price reaching this point here, so making a low, they'll be thinking, wow, I should probably be moving my stop loss, mate. Let's make sure that I don't really burn out on this trade, at least get away with a break-even trade. Okay, I mean, fair enough, you can do this approach, but if this hasn't been working for you historically, and I can assure you that this will not work for you over the long term, because the odds are simply not at your favor. So in this case, you should do things that you haven't been doing or you're not used to do, right? So you should avoid all of that. You should be doing things differently. So the reason why I said you should not be moving your stop loss is because every other trader, especially day trader out there, is moving their stop losses very frequently. So in our example, we had one retest, but then after the price retested once our entry, a lot of other traders, the ones that are more disciplined or slightly more disciplined, they will be thinking, well, maybe now is a good time to move the stop loss lower and then at least make sure that I'm locking in, reducing my exposure. Yes, but the reality is that the price sometimes might test it multiple times, 3 or even 4 times. In fact, some of the best trades I've taken, the price has been retested 3 to 4 times, guys. And not just the entry, sometimes the price will go higher, then pick up some new sellers, and only then go lower. So the practical lesson, the moral of the story today is please don't move your stop losses. No matter, you don't need to be using my system. As long as you're using a high probabilistic day trading strategy, just stick to those simple rules. The moment you start playing around with your stop loss too fast, the whole thing tumbles. So you're adding a new variable to an already a pyramid of variables, which inevitably at some point ruin your trading account. So just to be on the safer side, make sure that you're using wide enough stop loss, but not too wide, so you actually can have a higher risk to reward ratio over the long term, and don't move it until it's safe or until the price is miles away. So I really hope this makes sense, guys. But if you do have any questions or any doubts, please do leave your comments in the section below, and I'll see you in the next video.